Hey there, guys. My name is Angie Taranta, and I wanted to go over this Asensus surgical earnings that happened on March 11th, 2021. So, big day in earnings and a lot of really great stuff. So, we've got a ton of stuff to go into here. I always like the earnings. I like going over the transcripts. I think that always kind of gives me a little bit of clarity with the words they chose. Because, I mean, when they're doing the earnings, they're not just going off the top of their head. Like right now, when I speak to you guys, I'm just talking top of my head, right, just riffing. But when they're doing these earnings, these are all scripted and written out, and so there's definitely key information we can pull out of just reading them, and I think that that's a little bit more important. Or otherwise, however you like listening to my videos, I mean, this could also just be a way to kind of get the information that you need without having to listen to all the static and annoyingness of earnings calls. And maybe, the accent is a little thick with Anthony too, so it is sometimes a little bit difficult to fully understand what he's saying. And obviously, big words are being used, and there's a lot of confusing sentences that they structure, and I always like to cut through that, just kind of cut through the bull and sort of do whatever we can, right? So this is just kind of forward-looking video. So Anthony kind of hops in right here where he goes, "Thanks, Mark, and thank you all for joining us today. On today's call, we'll begin by reviewing our recent progress. Then I will hand the call over to Shamiz. And Shamiz is the CFO of Asensus Surgical. So definitely one of the more, definitely a really good guy. Really definitely like when he starts talking, and he's very easy to understand. So always nice to listen to. So going forward, turning to procedure volumes, I like this right here. I mean, we can kind of just start sort of stabbing at this transcript here. I don't want to read it verbatim, but there's a few things here that I did definitely want to point out. I mean, we see, just right off the bat, we see the Amsterdam Skill Center that was kind of put in 2021, and, just so much good stuff that, just unfortunately wasn't reflected in the in the stock price, that and including the the FDA clearance too. That was crazy that they didn't get any respect within the stock price. So turning to procedure volumes, after hitting a low point during the second quarter of 2020, which is fair. I mean, there was COVID, what were we doing there, and that's when we wanted to buy them. They were at about 30 cents a share right there, folks. You really want to buy these companies at their low points. It's really a great time to buy. So that's when we started looking at them. We have seen continued rebound during the second half of the year, with fourth quarter volumes approaching 2019 levels and growing sequentially over the third quarter by about 20%. So, good stuff. I mean, this is all kind of expected, guys. We already knew that we were going to grow. This isn't. Whoa, what do you mean? That's crazy. We should. If you've been with me this far, we should definitely be aware already that there's a lot of growth potential within the company. So shifting to an update on our financial sites at the end of the year, we have about 11 foundational sites, up from about 7 at the start of 2020, which I think is really good. As a reminder, financial sites are hospitals that are performing or on track to perform clinical procedures with Senhance at an annualized rate of greater than 100 procedures per year. So, definitely, would we like to see, more, of course, and that's what we're looking for. And I believe the idea is to install more surgical systems into more hospitals and, kind of expand that. So, is it a start? Definitely a start. Definitely in the direction of where it needs to be. Just remember, you're getting in at the ground floor, folks. Still at the ground floor of this company. We got to be aware of that. Turning to our third focus area, portfolio expansion. During 2020 and thus far in 2021, we made tremendous progress in what turned out to be a challenging regulatory environment given COVID. In February 2020, we received a CE mark approval that enables Senhance to be used on pediatric patients, which that's pretty big there. I mean, obviously we know that there's not a huge pediatric market, but I always brought up this point, and they didn't bring this up I was thinking about this when he actually brought it up in the earnings, and I actually brought it up a couple months ago, where I kind of bring up the idea of pediatric surgery as a bonus towards the efficacy of the product, and I think that that's something that we really want to focus on, especially since that's what we need it to succeed. So I think that was really good. And obviously there's benefits with the 3 millimeter instruments. And so, I mean, we already knew the 2021 received the CE mark for this version of the ISU, which we already know is the Intelligent Surgical Unit. A lot of just kind of recaps, guys. This is all stuff we should already know. Obviously, if you don't, they have a ton of videos. You can start from the beginning if you want to get as much info as possible, but this is largely review. Going over new information. Shamiz kind of gives us a really good idea as to how much available cash they have, which I believe is totaling, where was it? Should be about 100 million. I mean, at the end of the year, they did really, really well. Oh, okay, here it is. Okay, so yeah, so after the warrants, and the offering, they have working capital of about 169 million, and they generated about 111 of that within those last 3 months, which I think is really, really huge. So I think that's really, really big right there. And I think obviously that offering towards the end of January was really, really big in doing so. So Anthony Fernando kind of takes over here and gives us some perspectives and why he thinks it's such a good company. And he says, we believe that by digitizing the interface between the surgeon and the patient, we can unlock the clinical intelligence to pioneer a new era of surgery, which we are calling performance-guided surgery, which I think is a really great name, and I do agree that it is definitely a new era, and I think that is something you really want to kind of focus on here, guys. Let's zoom in a little bit. New era of surgery. Okay, so that's that's big, guys. That's big. That's that's pioneering. And that can be very beneficial to those who kind of support that early, okay? So let's see here. Did I skip ahead too much? No, okay. So we have made early progress towards delivering on performance-guided surgery through the introduction of our ISU, which is a really big, really, really great update. And if you're not sure what the ISU is, I do urge you to watch the ICR conference. That was a really big conference, so definitely check that out. Very, very good stuff. Turning to what you should expect from us in the near term, in 2021, our focus will continue to be driving the adoption of the Senhance globally and expanding the technological capabilities of Senhance. So, I mean, that's really, really good, especially considering they had the cash on hand to kind of pay the engineers, get the patents, and keep pushing towards a better and better surgery. And I think that depending on, obviously, Anthony Fernando's leadership, this could really, really show to be something super beneficial. So we're definitely going to see what he does with that and what exactly are going to be the improvements with the system and how beneficial are those going to be towards the surgeons and whether or not that's really going to rise their ability to sell those to hospitals. So kind of going into his market development efforts, in order to drive widespread adoption, we need to inform and educate our potential customers, which I think is really important, and that's why they're getting those clinical and peer reviews. So remember, things need to develop, markets need to be created, and then sold to. So if you don't have the market, then you can't sell anything. So it does take a little bit more time when you get in early. So you got to remember that this might be a little bit more of a longer wait, but the rewards will definitely be really, really great considering how low of a price you're going to be able to get this at. So that's really fantastic. Let's see the material expansion of our indications. Oh, excuse me. Let's see, we're unable to provide specific guidance related to procedure volumes and foundational risks, which makes sense. I mean, it's kind of, I guess, difficult to do so. I mean, I feel like they should be able to, but I think that there is, I think that last sentence or that last kind of part of that sentence really kind of rings true the most, which is we do expect significant growth as compared to 2020, considering COVID no longer being as big of a headwind. It's still there, but not as big, and I think even less so in 2022, which is something we want to be looking at. So last year, all the hospitals that installed a Senhance Open system opted to utilize a leasing model. which is really, really big. And I think that that's pretty important in terms of the fact that all of them did that, which means that there's definitely a leaning towards the leasing model, which I think is much more beneficial for the company. And, that's really, really smart thinking. And I think that, that's new thinking too. That's something to kind of take away from their past, where they didn't use that. Just to kind of go into it a little bit more, I mean, we knew that they got the CE mark, the FDA approval, kind of just COVID, having now been in the COVID environment for approximately a year, we are fully operational, ready to deliver on the demands we see in the market. You know what I mean? It means that they're definitely ready to go no matter what. And I think as COVID lessens more and more, I think that, those operational, kind of improvements are really going to, really pay dividends as they're going to be able to navigate the rest of 2021. I think pretty solid, and look towards an even greater 2022. And if not, we should be looking at positive per shares pretty soon. So I am definitely excited about that. So he does ask a few questions. I mean, there are quite a few questions here. They do ask a couple good ones. And it's definitely interesting. I like this right here. We're talking about the Russian markets and the Russian approvals. And this is Xiaomi's right here. Let's see here. Did I go over it again? Yes, I did. Okay. So it should be, this one. So Anthony goes, that's a great question. As we kind of alluded before, we've been building a distributor relationship in Russia to cover the Russian market for some time. He starts talking about a distributor out of Germany. We don't know who he is, but apparently he does have a good presence in the Russian market. And they're very well established. So they have sales teams, clinical teams, and even field resource functions. So we're really leveraging the infrastructure off the distributor to be able to enter the market and grow that market. So I think that's really important. I mean, obviously it might cut into their profits a little bit to not kind of just mainline it. But I think that the fact that they'll be able to get into these Russian markets with all the tools they need is going to be really, really beneficial to maintaining revenues and increasing the potential of revenue. So I think that's really important. Operator, next question. This is Frank Harris, Raymond and James Associates, Equity Research Analysis. So he kind of hops into a few interesting questions of procedure volumes, and I think that kind of just harps in on the fact that, we know that procedure volumes are going to go up, but I think that there is a, there's definitely the question of by how much and for why, and I think that that's something we want to look into. So that's definitely something I'm interested in, is their procedure volumes. I mean, we know that the general surgeries are extremely important towards raising those, and I think that that's really going to help them get their revenues into a more positive area, and their earnings per share into a more positive area for the first time. So currently for the procedure in mix for U.S., I would say, not to be very precise, but probably the majority of the procedures are in general surgery space in the U.S. and also gynecology. And I think this is where he kind of takes a stab at the general surgery and what is it? Who, how do we get there? So, or what are you expecting, I guess? And I mean, he's expecting definitely faster growth compared to the gynecology procedures in the U.S. with the new placement. So, it kind of does give them a much wider boat. And this is the final question. He just talks about the 3mm instruments, which, we already know that it's definitely really, really good and good for the pediatric area too, to have, instruments that small. But at the same point in time, I don't think it's a make or break. And I think kind of Anthony brings that up too, where he says the pediatric market is, it's a market, but then the market, I think it's the direct quote, the market is not, I would say the market's not very large, but even though it is a relatively small market, there is very little technology adoption and available technologies from a surgical standpoint of view available to the pediatric space. So even though the market is small, they have a very good kind of position to corner it and take advantage of the small market size guys to really dominate it, and I think that's going to be really big, especially going forward into the future, and kind of building just robotic surgery trust, starting with the youth. So that's basically all Frank had to say. And that's basically wraps up this whole kind of presentation here that I have here. All in all, guys, good earnings. I mean, there's just nothing really too crazy, nothing unexpected, guys. This was very expected earnings, and I think that we might have a little bit more of a unexpected bite in your bottom lift earnings towards May, because we really aren't going to have any clue as to what they're going to have then. So I think we're going to have to kind of really hold it out till May, wait for those clearances, wait for the people to kind of submit the FDA clearances, wait for earnings, and on top of that, wait for the peer reviews in the papers, which are happening all the time. So a lot of really great stuff, a lot of really interesting stuff. Definitely, very still heavily invest in this company. Not sure if I mentioned this at the beginning of the video, but I did sell, like I said, about half of my shares, but that was for personal reasons, less because of the fact I wanted to sell, but more because of the fact that, I had no choice. Unfortunately, I had to help my mom, and, she's in the hospital right now, so I had to kind of sell, and, hopefully it's the last time I'll have to sell for a long time, so that's really what I'm hoping for right now. But with that being said, guys, I will see you next time I see you, maybe Friday. I might do another weekly update. I've kind of been, I don't know if I want to keep doing those. Not that I'm losing motivation towards the channel as much as I'm just trying to figure out where exactly I want this channel to be, and what my goals are with it, and whether or not I even have a specific goal. So with that being said, guys, thank you so much for stopping by, and I hope you have a great rest of your day. All right, bye-bye.